All right, I am way too stressed out right now. I just had a very stressful day. I'll go over that with you right now, but full TP taken. That was a perfect 127, not perfect. It was a good 127 risk reward trade. Um, it was stressing me out the whole way, but this is what the chart looks like. Before we do that, I'm going to go over my new strategy. So I have it written down in this Google Docs right here. So with implementing order flow, at the start of the morning, I just got a big list of everything that I was trying to go over. And over the weekend, I was back testing. Over last week, I was back testing, seeing how to do it and what is the most profitable way. And turns out with this new strategy, instead of a 60% win rate of 1 to 5 risk reward, maybe a little less, now I have a 60% win rate of about 1 to 8 to 2 risk to reward. So hopefully the win rate goes up over time, just learning how the market moves. But that's what I got for now for the past week of back testing. But for this new strategy, I'm going to mark out all of the highs and the lows and mark out all of ICT strategy first. And then I will go into the volume profile and the order flow strategy behind it. And with the order flow strategy, I'm just going to do the previous 5 days of volume profile. And then if that doesn't really tell me anything, then I'll go based off of market structure and do a volume profile off of that. This helps me, the order flow strategy, with a high volume node. I put the take profit at the start of it, and then I'll put stops at just my normal stop loss. But I'm trying to do tighter. Instead of the top wick, I'll do like the candle close or open, whatever it is, just to get a better risk to reward. And the biggest thing that I noticed is if I'm touching my stop loss or take profit and trailing it, just trying to de-risk and stuff, it completely ruins the probability of your returns over the year. So with that being said, no matter what, as you can see here, I will not be touching my stop loss or take profit. It is just strictly enter the trade, set the take profit and stop loss, and walk away. Also, like managing a trailing drop or trailing stop loss, then it like kind of messes with you mentally, and then it's a lot of like not necessarily in that moment, but over time, then it just reinforces bad habits of just kind of, I guess, jumping in at every tick that you see. So just staying away from that. So with all that being said, I will walk us through it. I'll remove this out of the way. So here, I'll just remove everything. Why not? It'll probably be easier that way anyway. Let's see if we can replay. Oh, here we go. I will replay to we'll go here. Never mind. Apparently it doesn't let me. Perfect. All right. So I guess we're just going to have to look at the structure how it is now. But at this point, this candle, a little bit in the market open, like right at market open, we took out these lows. And then I thought we were going to take out these highs up here. So with that being said, because it was taking out these lows for ICT, I thought it was a little manipulation to go higher, so I was bullish on the day looking for longs based off of ICT. So going back to the 5 days, so that is, today is Tuesday, duh. I'll do market open on the last Tuesday. And as you can see, there's not much going on here. So with that being said, when there's not much going on the 5 day, then I go to relevant price action. So it's not going to show exactly what I saw earlier, but I just did it at this move high until now. But as you can see, looks like it is still there. There is this big value area high. So the top part of the 70% bell distribution curve. And there is also a fair value gap at that high. So I marked out that fair value gap. I was like, okay, this is a very, very good rejection zone to go lower. It's against my bias, but just something to be aware of. So with that being said, here I'll leave it there for the future. But with that being said, coming down to the 1 minute time frame, we respected this manipulation perfectly, went higher. I didn't want to take any longs because the risk to reward was too skewed. Like, let's say I enter there with a stop loss here, take profit at just the start of it, it would be a 1-5. Like, that's just not good, or 1.5, sorry. That's just not good enough for me. But within this fair value gap and value area high, which is a perfect rejection zone, we have a manipulation, and then we have a displacement to the downside within the big time frame. So I should have entered there, but I didn't. At the time, the value area low was at the just about the open of this candle. So take profit would have been there to the other value area. But because the trade in this wick at around here was right on the point of control, this red line that you see going across, that is the point of control. Because it's right at that point, I didn't want to take a trade and I skipped out on that because of that. But in reality, I should have just targeted the value area low and taken that trade. But also in the meantime, I was thinking, okay, we respected this manipulation. This could be, like, I don't know for sure what's going to happen. It could go higher still. But what I realized after the fact is this was a perfect liquidity sweep to go higher, to get all of the orders for shorts. So then price is at a good point for shorts, and it's a good price for it. So it was a high time frame manipulation to go lower. It doesn't really show that, but like it's a sweep to go longs, so then they could take out all of those long orders to go lower. I hope that makes sense. I don't know, I'm not that great at explaining it. But then we saw this at this point. This is still where the value area high was. So we tapped into the value area low. My bad. So we broke through it at this point. And then we had it tap into the value area low. Here, I'll just mark it out. It was about at this range. We tapped in with this wick and then displaced lower with 3 candles. So with that being said, I wanted to enter at this point, and stops, because the wick is so long, I would have put stops at the open of that wick instead of the full wick of it. And it doesn't show it anymore because there is so much volume, but there was a start of the high volume node at this level here. So I would have had a 1-6. But as I was about to enter, the market shot down, huge market orders. So at that point, it wasn't a good risk to reward, so I stayed out of it at that point. I'm very annoyed that I wasn't prepared for this move and that I wasn't quicker to it. But at the end of the day, I'm not super mad about it because I can't have FOMO, but that's the part where I'm saying it was stressful earlier, because I could have had this big short move down here. I could have had this big short move down here, but I missed both of them. It could have been in profit $3,000 on the day. So that's why I was so annoyed with that. And yeah, so also I'll show you the volume profile for the day at this point, because now we broke through again. And here is where the actual rejection point is that I was for the actual trade that I took. So we went lower here, and then we came back up to the value area low again of the higher time frame. This is the higher time frame one. This is the open till now. But as you can see at this point right here in the volume, there is a low volume node. So marking that out, that is lined up perfectly with, I'll remove it out of the way, with this fair value gap right here in the 1 minute time frame. So that was a perfect rejection zone. So with that being said, I was just waiting for it to come back up and then displace lower. And I wanted to see a close below the series of up close candles here, but as you can see in 2 candles, we didn't get it, and stops at the high volume, low volume node, fair value gap high, and take profit at, I'll remove this out of the way, but the big move low. So there's like the big move up, and then the candle, the wick that it started on, the low of that, that's what I had my TP at. So at about this point here, zooming back into what actually happened, it displaced through here. So with that being said, I was waiting for a pullback, and once we get the pullback to here on the next candle after the displacement, I entered for a 126. It was perfect entry for me. I was thinking about putting my take profit to this point here, right at the start of this high volume node right here, which would have been a perfect entry, but it wasn't a good enough risk to reward. It would have been a 1-to-1. I wanted to see a little bit more. So I waited, and I didn't put my take profit there. And then once I saw it respect this perfectly, I was getting super annoyed and super stressed out. This is where it was annoying. But I decided to stay disciplined and not move my stop loss or take profit and just let the trade do its work. And thankfully it came back down and hit full TP. So that was the trade for today. Just one trade, should have been 3, but I missed out on both of them. So what I can learn from today is the liquidity sweep is a sharp move higher, but I should be respecting this high vol or the value area high as like a wall in the true rejection zone, and the liquidity sweep is to get up to this point. Plus there's a fair value gap there. So value area highs and lows take precedent over the manipulation on the higher time frame. So that's just something to keep in mind. And also I got to be prepared for an entry. I can't enter late and miss this big perfect move that I was wanting to get, that I wanted to take, but missed out on that. So again, value area high and low take precedent over liquidity sweep if they're both contradicting each other for biases, especially if it respects it perfectly. So just waiting for price action and waiting to see it respect it good. And once it does, that's when you enter. So reacting to the market, as I should have seen that it reacted to this perfectly and went lower at this point, should have entered short without hesitation, but I did. Not super mad about it because of the point of control, but still a little annoyed. And then here I should be prepared, see that it's coming, and just be ready to jump in with my risk already set instead of having to figure all that out and then seeing a big move happen after I waited. So with that being said, kind of just got to be more on my toes, ready for the market, and just be more focused. So that's pretty much all I got for you guys today on the trade recap. Looks like we could have targeted even more lows down here, but I didn't want to push it any further. I didn't want to be greedy on the take profit. Just wanted to take what I can and get out. And be safe with it. So if you guys are new, we do a verse of the day at the end of each video to put God at the center of our trading journey. So with that being said, the verse of the day is Micah 6:8. So Micah 6:8 says, "He has shown you, O mortal, what is good. What does the Lord require of you? To act justly and to love mercy, and to walk humbly with your God." So pretty straightforward. What does the Lord require of you? To act justly, to love mercy, to walk humbly. But yeah, that's pretty much all I got for you guys today. Verse of the day was Micah 6:8. But I will see you guys in the next trade recap on the week, and I'll keep you guys updated on that.